Hey traders, it is Friday, March 28th, and I'm just sitting outside on a nice sunny but very windy day. So good thing I got the little fuzzy thing on the microphone so the wind won't get too intense for everybody. Just wanted to make a video talking about the action today. It's obviously super crazy. Anybody that is trading, I don't have to tell you, it was a wild day. Everything completely down today. But it was a great day for me because I didn't change up anything. I traded my strategy the way I always do, stayed on the right side of the 200 EMA, and traded a few more contracts than I have been trading in recent weeks, but made over $2,600 today and like 37% P&L on the day. And I made most of my profit within the first hour of the day. But the reason that I wanted to make this video specifically about today and what happened yesterday and today is to explain why I never trade same day expiry. There's a very good reason for it. And the way that the price action played out yesterday and today is a perfect example of illustrating why I don't trade same day expiration. So yesterday, as soon as the market opened, I got a handful of contracts on both the SPY and the QQQ. And I can't remember exactly how many I bought at the open, but it was fairly quickly right after the bell yesterday. And I got put contracts. Price fell out for like the first, 10, 15 minutes of the day. And I actually made some money on the contracts that I closed because basically what happened today is what I thought was going to happen yesterday. And if you have seen any of the videos on my channel, you'll know that there's a lot of other videos that I have where I'll say what I thought was going to happen yesterday actually happened today. So a lot of times in the sort of big picture view of your prediction, you will be right. You just won't be right in exactly the same time frame that you think that you'll be right in. And that's what happened to me yesterday. I had a very bearish lean going into yesterday because I knew that the PCE numbers were going to come out today. I thought that they wouldn't be good. I thought that the consumer confidence numbers wouldn't be good. I thought that all of the political turmoil going on in the country and the world wouldn't be good. All of the things that I predicted came true. They just didn't come true yesterday when I thought they would. They came true today. And now, if I was trading same day expiration, I would have been forced to close out my trades for a loss because, like I said, I got a handful of contracts on both SPY and QQQ yesterday morning, closed out a few of them for a profit within like the first 10, 15 minutes. But then I held, I believe it was 4 SPY contracts and 3 Qs contracts. And I had those held open. And then if you look back on the price action from yesterday, I'll put a screenshot of it up right now so you can see. You'll notice that about, I don't know, a half hour in, we just did this and it just unexpectedly ramped up for some reason. Didn't make any sense to me. I didn't know why it was doing that, but I had my contracts that I opened up yesterday with today's expiry. And so because I had today before I needed to close the contracts, I wasn't forced to close my contracts yesterday. And that made the difference between me having a big loss and me having a very big profit. Now, if I had been holding yesterday's expiry, then as soon as we ramped up and took that huge upside move, I mean, there's basically nothing that I could have done except close my position for a loss. That would have been the only thing I could have done. Either that or just completely gamble on the fact that we did fall out again yesterday, which could have happened, but it would have definitely been a gamble. I mean, everything in trading is a gamble, honestly. You know that. If you day trade, you know that nothing is guaranteed. But what we're trying to do is we're trying to play the averages based on what we see on the charts and how we interpret the information in the world to the best of our abilities. And so, you know, I don't want to make this video super long, so I'm not going to go into the specifics of everything that I was looking at in, you know, on the charts and in the news and everything. But long story short, all of the information that I was collecting in my mind was making me think that we're in for some downside action. And I thought that would happen yesterday, and it didn't. But because I had today's expiry, I was able to hold it overnight, which again is not something that's ideal. It's definitely not ideal to ever hold anything overnight. But I had enough conviction in my prediction that once the PCE numbers came out and the consumer sentiment numbers came out, that we would fall. I had a really high degree of conviction that would happen, and I was honestly very stumped as to why the price action was what it was yesterday. I still don't know why that happened yesterday, but again, that's another good point that I can make. A lot of days, things will happen and you just cannot figure out why. You just look at the charts and you go, I have no idea why this price action is doing this. Nobody has a crystal ball and nobody's right 100% of the time. But I was very confident that by the end of the day today, we would have taken a move to the downside, which we did. And again, today is the last expiry of the month. It's a Friday. All of these things together made me think, you know, we're heading down today, and that's what happens. But the point of the video is to just explain and show you why I don't believe that trading same day expiry is a good idea. I always give myself at least 1 day, sometimes 2 days when I'm trading SPY and the triple Q. Always give myself at least 1 or 2 days of extra time, never same day expiry. And because I did this yesterday, that was the difference between me losing probably $600 to $800 at the very worst point of the day yesterday. I was negative. Now this is an unrealized negative, of course, because I didn't close the position, but I had an unrealized negative loss of like between $600 and $800. I can't remember the exact number, but I was confident that we would fall out between that moment and today. And so I held it open. And then this morning, as soon as we opened up, I actually added into my position because I still had a lot of confidence that we would fall today. So I added into my position as soon as the market opened up today. I'll put my screenshot right now of all my trades today so you can see everything I did. And then if you want to look at the actual minute charts, you can see how I traded it minute by minute. And I just did what I always do, which is I got in, I closed my position like one at a time on big red candles, and I closed some of them quickly because, you never know what's going to happen. Everything's very, very unpredictable right now. So although I thought that we would fall today, I mean, it's like I'm done trying to predict the future because you simply can't. I mean, you can't. You can only see what you see right in front of you and make the best moves based on what you see right then. And so on the big red candles, I'm closing my contracts one at a time. And each time I close another contract, I've made a slightly bigger profit on that one contract because price is continuing to go in my direction as it falls, at least today, because I've got puts. So I want price to fall. Price is falling. I'm making money. And you'll notice that I closed everything except one contract on the triple Q and one contract on the SPY. And then I closed that one at like 11:30 a.m. just because I saw that, earlier in the day we had really fallen in a very steep direction and then we had kind of started to level out. So the combination of the fact that at that moment when I closed it, price action was leveling out, along with the fact that you've got time decay happening, and I didn't want to keep my options open all the way till the end of the day because I didn't want the time decay to eat out my profits. But at the same time, I was already so far in the money at this point that the time decay was less consequential to me at that moment, because time decay will always be the most consequential to you when you're closest to at the money. So if you're either just one side, above or below at the money on your strike price, that's going to be when time decay will hit you the hardest. The further into or out of the money you get, the less time decay will actually be a factor in your price that you'll get. Simply because time decay works by sort of trying to calculate the percentage of are you going to be in the money or not when your option closes. And for my strike prices that I had with both SPY and the triple Q, I was so far in the money at that point that there was basically a 0% chance that it was going to expire out of the money. So the time decay was less consequential to me at that point. But that's a whole different thing. But basically, point is, don't trade same day expiry unless you go into it with the thought that you are going to be in and out like within 15 or 20 minutes max, like seriously scalping. If your idea before you enter the trade is I'm going to scalp this within minutes, then sure, same day expiry is fine. But when you want to try to get a little bit more of a move, and you want to sort of let it go just a little bit longer because you think you can get more of a move, then give yourself at least 1 or 2 days of extra time before your expiry. And because I did this, I turned what would have been a losing trade yesterday into a big winning trade today. And so that's it for now. Hope you've had a good week. If you've been paying attention and you've been quick in and out and you've been able to just see things as they are and not the way that you want them to be, or you haven't been trying to guess when the bottom is going to be or guess when the top is going to be, then you've probably been doing pretty well. And so that's it for now. I'll talk to you whenever I talk to you, when I make another video. Until then, good luck, everybody. Take care of yourselves.